Hello traders, my name is Tomasz Wiśniewski. I'm a chief analyst in Alpari Research and Analysis, and this is daily analytical report. Let me show you what happened on the markets yesterday and what is going to happen most probably today. But first we need to check the macro calendar because we had interesting data from China, inflation. Well, depending from the source, but let's say that this data came in line with expectations. So no surprise here. The calendar was packed yesterday, and yesterday what we got in the calendar was ECB, but ECB failed to increase the volatility. Yes, euro was a bit weaker after this, but at the end of the day we came to the normal levels. So what Draghi, well, we had interest rate decision, obviously rates remained unchanged, but also we had a statement, press conference. What Draghi said is the governing council stands ready to adjust all of its instruments to ensure that inflation continues to move towards the inflation aim. Also, he said that details of the precise terms of the new series of quarterly TLTROs will be communicated at one of our forthcoming meetings. Also, he said that pricing of the LTRO 3 will take into account assessment of bank-based transmissions. He said that ECB still needs to consider if negative rates need mitigating, and that headline inflation likely to decline over coming months. So this is what Draghi said. Apart from this, few hours later we had Fed. Fed was slightly hawkish, but the dollar is not gaining strength right now and wasn't gaining yesterday after this. What Fed said is that Fed does not rule out a rate hike if the economic situation improves. This is the main headline from this. Well, ECB and Fed were not only central banks that increased the volatility yesterday. Quite surprisingly, we had Reserve Bank of Australia Deputy Governor Debele talking, and he made a hawkish statement about the economy. He said the job market is very strong and leading indicators are solid, and this helped the Australian dollar to climb higher. And actually, among the major currencies, the Australian dollar is doing great job, is the best performer right now, but it comes in line with the technical situation too. So, well, let's say that's it from the fundamental point of view, and we can focus now on the technical analysis. So I would like to show you the Australian dollar to American dollar first, maybe daily chart. So on a daily chart, what you can see that candle from yesterday broke major dynamic resistances. First was major long-term downtrend line, and the second one was upper line of the symmetric triangle pattern. Here's the lower line of the symmetric triangle pattern, upper line, and this downtrend line. So we broke those two dynamic resistances. We broke this horizontal resistance. We later used all those three as a support. We had a false breakout as well, and the price climbed higher. So from the technical point of view, this is really top-notch buy signal, and I would be really surprised if the price did not continue to go up in the forthcoming weeks, because this signal is the long-term buy signal. I think it's enough for the comment. Now American dollar to Swiss franc, which yesterday was here and was having beautiful technical bearish setup, but despite this bearish setup, the price did not climb lower. It was a bearish setup, but it wasn't a sell signal. This is what I also said yesterday. It wasn't a sell signal. And the price was on the horizontal resistance created by FIBO and recent price movements. We broke this resistance, and today we had horizontal resistance. Now we do have dynamic resistances. First one is the upper line of this flag, and the second one is the neckline of this triple top formation. So this is another place where the price can bounce. Actually, the last place where the price can bounce. Breakout above those two will give us a proper buy signal. The sell signal on the American dollar to Swiss franc will be created only when the price will break the lower line of the flag, and this can happen here. Euro dollar, these are the movements from yesterday. So drop after ECB, upswing after FOMC, and we finished the day more or less on the same levels as we were before. Pretty typical thing for the markets, for the euro dollar during the central banks, because it's very common to have intraday volatility, but at the end of the day we are in the same levels. And now two areas count, two areas matter for the euro dollar. First one is the horizontal resistance here created by 38.2 FIBO, which was proven as an important one yesterday and 2 days ago. And the next one is dynamic support created by the line connecting bottom of the head of the inverse head and shoulder pattern, right shoulder, and yesterday's drop. Price breaking the lower red line will give us a sell signal. Price breaking 38.2 will give us buy signal. This is what is happening on the euro dollar. This is our outlook on the euro dollar. DAX started this day on a back foot, but now we do have a reversal. This reversal did not happen in a random place because it's a 23.6 Fibonacci, but also lows from Tuesday. Price breaking the red line will reopen as a buy signal on the DAX. Now dollar index, as you can see, despite hawkish comments from Fed, we do have a decline, and the price should aim those two lower lines of the ascending triangle pattern, and pretty much that's all I have to say about the dollar index, because we are in the middle of this formation, which is not very interesting. Euro to Russian ruble, this is beautiful setup, and also I was telling you about this many times. So after the breakout of the horizontal support, the price went lower, then tested the support as a resistance. Test was positive for the sellers and the price declined. This is just a typical price action movement. So head and shoulder formation, breakout of the neckline, breakout of the horizontal support, test of the broken support as a resistance, and drop. This is pretty clean. Crude oil went last week above the channel, upper line of the channel up formation. Then we do have a pennant and upswing. So the price is in a bullish territory, and we do not have any signs of reversal whatsoever as for now. Cable is not moving much, which is pretty unusual for the cable. Well, it is it's typical for the past few weeks, but in general for the cable, if we consider a few years of trading, that volatility, intraday volatility of 50 pips today is a joke. Let's say like this. So what the price is creating, we do have a dynamic support, horizontal resistance, dynamic resistance, another dynamic resistance, another horizontal support, another horizontal resistance. And in my opinion, like for the long-term traders, price being between orange lines is a sideways trend, and long-term traders should look for the breakout of either the upper line to buy or the lower line to sell. Now, for me, as a trend follower, it's a no-go zone. S&P 500 made a small correction 2 days ago, reversal today, and they are making an attempt to break the major horizontal resistance. American dollar to Russian ruble is doing what expected few days ago after we witnessed this false breakout above the horizontal resistance. So we made a false breakout below the resistance buy signal, false breakout above the resistance and a sell signal, and the price is declining right now. Bitcoin, about the false breakouts, well, Bitcoin made an attempt yesterday to break the horizontal resistance, which was unsuccessful, and we do have a drop. This is the power of the false breakout, guys. Price on Bitcoin. Bitcoin price did not stop in a random place. Where the place where we stopped is a long-term, well, mid-term lower line of the ascending triangle pattern. As long as we are above this line, the sentiment is still positive, and we have high chances of getting to $6,000 for one Bitcoin. And this is still the base scenario for this cryptocurrency. New Zealand dollar to Canadian dollar, I had a short position here which was closed yesterday on a break-even point. The price made a reversal above the horizontal resistance, dynamic resistance. In general, there is still a sell signal which is coming from the weekly chart, but as you can see, the price created hammer, is creating a hammer. It's almost Thursday. Hammer is negative. Is negative for the sellers, is positive for the buyers. So this is why I escaped from the position. Most probably the price will aim the orange resistance, and the price creating a reversal pattern on an orange resistance will be another occasion to go short. As you can see, today is the third bullish day in a row, so price decided to kick me out of the market, but I decided earlier to put my stop loss into break-even point, and let's say it was a mutual decision to close this position. But as long as we stay below the orange area, the sentiment is still negative. And again, I will tell you that again, price creating bearish reversal pattern here, like a shooting star or an engulfing, will be a good occasion to go short. American dollar to Japanese yen. Remember what I told you yesterday? You can check this on the recording, that we do have an awesome clean sell signal on the American dollar to Japanese yen. Boom, look what happened. Beautiful. Where did the sell signal come from? Well, head and shoulder pattern, breakout of the neckline, breakout of the horizontal support, typical correction. This is a flag. Breakout of the lower line of the flag brings us the sell signal. Now we do have another correction, which should also result with the sell signal. But in the longer term, we are in a bigger wedge, and a breakout of the upper line of the wedge, breakout of the upper black line, will give us a buy signal. New Zealand dollar to American dollar, setup pretty similar to American dollar to Japanese yen. Same but different, let's say like this. In the long term, that's a nice sell because we broke dynamic supports. In the midterm, it's a nice sell because the price is creating a flag in a downtrend, so we should see the further drop. The price is still making lower lows and lower highs. And also it's kind of a horizontal resistance, so it's a good place to go short. The sell signal on New Zealand dollar to American dollar will be created when the price will break the lower line of the flag. Now gold, I still do have a position on gold. Let's do a short recap. After this hammer, I opened the long position. Now stop loss is already on the stop profit. And what the price is doing, price is going to test the dynamic resistance created by connecting the top of the head and the top of the right shoulder. I moved my stop loss to the break-even point. We'll see what will happen with this resistance. Maybe the price will go down like here. Apart from the head and shoulder pattern, what we can create here is a symmetric triangle. So upper line, lower line, this dynamic one. Breakout of the upper line, buy. Breakout of the lower line, sell. Last but not least, my another trade, Australian dollar to Swiss franc, where luckily I was able to use this upswing from those hawkishness from Reserve Bank of Australia official, and this allowed me to also move my stop loss to the stop profit. From the break even we went to the stop profit, so now 700 euros is on the table. Beautiful setup. If the price does not want to go down by breaking those supports, most probably will go up. The price is going up. Why my stop loss is here is because of the long-term dynamic resistance. Price can get here and then make a reversal, like a correction. But remember, price getting here will create inverse head and shoulder pattern with potentially super nice buying opportunity. But we will see. So far so good. So guys, this is the market right here, right now. I hope you enjoyed this daily report. Many interesting occasions. The best one again on Australian dollar to American dollar. We will see if this will work out. Thank you and see you tomorrow, and good luck in your trading. All the best.